Well, let's take a look at our grain and livestock market action once again and see how the trade is holding up. We'll focus on the grains first, and we'll go right to Chicago on the corn market. We opened up roughly about a penny higher this morning, and we had been trading about a penny higher last night. So far, well, we're about a penny and a half higher. The good news here is that it is hanging right in there and has not turned around and sold off. The March contract is at 370. So what that is a brand new high for the day. That's up a penny and a half. We have July now a penny and a half higher at 386 and a half. The analysts have been commenting about how stable this corn market has been for quite some time here, since about the first of the year. Just continues to work its way slowly higher. December now 3/4 higher at 399 3/4. It's on the high of the day and within one tick of that $4 mark. Once again, it did touch it yesterday. Meanwhile, on the soybean side, on the March contract, we're 6 3/4 higher now at 1041. So we're adding to the gains that we had after the open. We have July up 6 3/4. And if you look at the wheat trade, this is the one that had the most strength overnight. March Chicago wheat 5 higher at 464 and a half, and July now 4 3/4 higher. In Kansas City wheat, we have the March contract now 9 1/2 higher, 487 1/4, and we have July 8 1/2 higher at 520 1/4. Minneapolis has also been trading a little bit firmer today. We're now 3 3/4 higher at 599 3/4 on the March, and July up 4 at 623 3/4. Let's go to Scott Gecas. He is at the floor of the CME group, at least at the edge of the floor right now, and he happens to be joining us from Longleaf Trading. Hey, Scott, how are you today?
Good. How are you guys? Thanks for having me.
I'm doing great. Thank you for joining us here. Firmer tone all across the grain complex right now. What's the talk on the floor here today?
Yeah, I mean, everything looks good. Everything's green across the board as far as, the grains go. Everything's still focused on all the dry weather coming in from Argentina. About 85% of the soybean crop is suffering due to, extra moisture in Brazil. So you're seeing dry weather in Argentina, and too much wet weather in Brazil. So, production is declining a little bit in Brazil as well. It's below the 5-year average. The one thing that does set support prices right now is one of the stories that I was reading this morning is, China's still going to Brazil rather than U.S. for their soybeans. The fundamentals are, pretty bearish for soybeans, but on the technical side, I mean, it's got room to run. 1040 on the soybean market is the line in the sand. To break below 1040, you should see some strong selling pressure coming into play.
So how intense do you think that pressure is on the selling pressure on the soybeans right now?
Well, like I said, last Friday when I was on, when your cab driver starts talking about, the direction in the grain market, it's a little bit toppy, but, I think that 1040, you're going to see a very big spike in volume as well as selling pressure.
Yeah. We were talking yesterday about the fact that the commodity funds, the big funds, the investment funds out there, they had turned net long on the corn and the soybeans. They were not yet on the wheat, and the wheat is making a big move right now. And we had some new winter wheat condition updates from the different states in the Southern Plains yesterday. And it showed, compared to a month before, in most cases, another decline. Kansas went down 2 percentage points in the good to excellent category again. They're only 12% good to excellent right now. Oklahoma stayed at 4%. Colorado actually went down 6 points this past month. So this market, I don't know if there's going to be anything to really make that wheat really sell other than maybe getting moisture through the plains here.
Yeah, I mean, we're going to see how that goes. The poor versus very poor increased to 49%. That's the highest on record, especially with the wheat market. So we're going to see, what happens with that playing out. But, if there's not, that's one of the reasons why you're seeing a higher prices in wheat, moving forward. So we're going to see how that plays out.
Okay, quick look at our cotton market, and then we'll jump to livestock after the break. On the cotton trade right now, on the nearby March contract, we're 4 points higher. We have the new crop December down 3 points at 76.84. In the middle, they're moving widely mixed between 20 and 40 points either way. All right, we'll come back in a moment and talk more with Scott Gecas of Longleaf Trading. We'll talk livestock when we come back. Well, Right now, we're talking with Scott Gecas of Longleaf Trading in Chicago. He's at the edge of the trading floor, and I want to look at the outside markets. We had the Dow Jones Industrial Average this morning after a strong performance yesterday, actually firming up again on the open this morning. I believe we have a look at it here. Last time we checked, it was up about 70 points, and now it has turned around and gone down 53 points, 25,657, so a bit of a reversal here in the first hour of trade. What's the dollar index doing this morning? We can take a look at that and also the crude oil as well. On the dollar index this morning, we have the nearby March futures 390 points higher at 90.180. That could be significant. And if we look at the crude oil trade today on the West Texas Intermediate crude, we are now down 75 cents on the April contract. We're now at 63.16 per barrel. So turn around to the downside there. We're getting close to $1 off of our earlier highs, about 90 cents or so from our earlier highs this morning. Scott, is that going to play into these other ag commodity markets here today at all with the choppiness that we're seeing here in the outside financial markets?
Yeah, with the oil as well as the dollar, everything is going in, moving forward with all the eyes are on the Fed. So you have Powell speaking for the first time today. You have unemployment on Friday. The FOMC meeting, it's pricing in about an 87% chance of a rate hike. What is going to be the concern with all that is how many times are they going to raise rates this year? Is it going to be 3? Is it going to be 4? If they do any type of surprise, in the FOMC meeting, March, whether it just be a quarter or even more, that's going to cause significant volatility. So that's where all the eyes are, especially with the dollar as well as oil. Oil did break 64 yesterday. That is a big number. If you get a close above 64, it's got room to run all the way up to contract highs around 67. With the oil market in particular, everyone's been saying $80 a barrel. They've been saying that for the last few months. So we're going to see how that plays out. But right now, the trend is definitely higher in oil.
And the general rule of thumb is anytime you get oil over $60 a barrel or so, that tends to really ramp up the shale production. So we'll have to see which is chasing which here in the near future here. All right, a lot of noise. If memory serves me correctly, Scott, are you situated close to the S&P pit? Is that why there's so much activity behind you today?
The euro dollar is behind me, okay. And then the 30-year bond is behind that.
Euro dollar, okay. So it sounds like it's really active today there. I want to jump over to our livestock trade here. And, of course, a lot of question about how the investment money is flowing in and out of the different markets. Seems like they were pretty attracted to the livestock trade here today. We had a significant jump after the open. Let's look at our quote. On the live cattle board, we don't have all triple-digit gains right now, but we did for a while. February up 92 at 128.32. Now that one goes off the board tomorrow. April up $1.38 at 125.38. June up $1.02. On the feeders, we currently have the nearby March contract up $1.70 at 147.25. April up 187 at 149.82. And on the lean hog trade, they were on both sides of unchanged. Right now, everything just a touch higher. April up 20 at 70.15. May up a nickel at 76.50. Most of the action in the cattle trade, Scott.
Yeah, the cattle, supply concerns are still in the cattle market. That feed report on Friday, that was the highest since 2012. The placements were the highest since 2006. Slaughter rate still comes in a little bit higher. The traders are net long. A break of 124 is going to be a little bit bearish, and you should see a lot of bit of long liquidation, a break below 124.
All right. Thanks for all the information. Great to visit with you again, Scott Gecas of Longleaf Trading. He's located right there in Chicago, where it sounds like it's a very active day on the floor. You can hardly hear him out there.
At least in the Euro pit, huh?
You're right.
Okay,
Today.
thank you. Markets editor Marlin Bohiling.